expansion of currency in circulation. It's that's been driving all financial asset values and also driving physical property values. Of that, there is absolutely no doubt. And that will come to an end. And the way it comes to an end is when the market reasserts itself, when the market will no longer tolerate a situation where on a 10-year US Treasury, a yield of 1.7% is sufficient. When there is inflation running at over 7%, inflation measured by the increase in the CPI. And if you look at John Williams' shadow stats, I mean, he reckons it's closer to 15%. So, basically the whole thing is sort of horribly mispriced. It's rather like sort of stretching a rubber band until it snaps. And I think that's probably an analogy of what's going to happen. How the central banks respond to the crisis is really, I think, the thing that we need to consider. Putting the Putin-Ukrainian war to one side for a moment, I mean, that's going to have a major effect. I'll come to that a little later on. But the effect, I think, of, if you like, a crisis, an inflation crisis, is that the Fed would have to raise interest rates very significantly. Now, we need to understand what raising interest rates represents. It does not represent the cost of money. What it does is it represents compensation for the market's expectations of the change in the purchasing power of the currency unit over time. So if you're going to sort of lend to the US Treasury money for 10 years by buying a US Treasury bond, you're going to expect compensation for the loss of purchasing power on an annualized basis over that period. Now, quite clearly, what I'm saying is that the right yield on the 10-year US Treasury should be somewhere between 7.5%, 8% and John Williams 15%. Now, that can give you a pretty good clue as to the downside in a crisis of US Treasury bonds. And that, of course, also affects the valuation of equities, because the whole basis of valuation of equities is not, as you might think, the overall earnings of a nation's equities comprising an index. It is more money flows, and the money flows basically are determined by where the returns are, and you get a comparison in terms of valuation between U.S. Treasuries and equities. So, if you get a collapse in the price of US Treasuries, you're going to get a collapse in equity markets as well. And I think we're looking potentially at a bear market which could wipe out an awful lot of value. And remember also that I haven't looked at it recently, but certainly I think I'm right in saying that in November or December, the level of leverage in financial markets, according to the regulators, was around about $900 billion. I mean, we're talking huge sums here of borrowed money. And of course, as prices start going down, you find the banks start calling in the collateral and you get a self-feeding effect. So, no, I mean, if you're going to print a whole load of money, then you're going to knock its purchasing power, and everybody's been doing it. So don't be surprised to see prices rising. It's really as simple as that.
Now, how do you make sense of it all, where we're at right now? What stage of this decline are we in now? Obviously we know the United States printed about 40% of all US dollars, basically since the lockdown started. We're seeing inflation getting out of control all over the place. And of course, the natural, when all of this is happening, there seems to always be a new war when things start to get out of control. So there's a lot going on. How do you make sense of it? And where do you think we are in the stage of this cycle that you've spent so much time researching on?
Yeah, I mean, I think that cycle is the right word, because I don't mean in the sense, I mean, so many people talk about cycles and they have this cycle and that cycle, but to my mind, there's only one cycle that really matters, and that is the bank credit cycle. And it's a cycle of banking behavior, in effect. And roughly every 10 years, give or take a year or two, it all comes crashing down. The last time was the Lehman crisis, and that was in 2008, August 2008. So this cycle has got a bit long in the tooth. And as to your point about, how sort of things evolve, I think one's got to think in terms of not, they're printing money and therefore, inflation is going to continue and it's going to continue, and they're probably going to continue printing money, and we got problems that are going to go out until 2025, 2026. No, not at all. The whole thing is predicated by this, periodic crisis, which happens roughly once every 10 years. And we're so obviously heading for a crisis. I mean, you've only got to look at the overvaluations of all financial assets to see that that's not natural. You've only got to look at the negative real yields on government bonds. That's not natural. And your point about a war is well made. I mean, I don't think I can actually tie in the Ukrainian situation into a bank credit cycle as such, but this is extremely concerning. And I think that it's all part of something that can really trigger the crisis. And the crisis will be triggered. And then we have to think, well, after it's triggered, what happens then? And that, I think, is the very big question and a frightening one to consider.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.